And a bit of a pullback here would not be surprising. I'll give you a better entry point if we can work off some of this overbought condition heading into year end. So you got to get this pullback, lets the markets kind of reset a bit. Think about stretching a rubber band. Markets have kind of stretched that rubber band as much as it can here over the last couple of weeks. It's been a very aggressive run. Got to relax the rubber band a bit before we can stretch it again. On July the 1st of this year, we wrote an article talking about too much complacency in the market. And we said, hey, markets have had this really terrific run up here into July, and we're due for a 5 to 10% correction. A 10% correction would be absolutely normal in any given year. We then peaked the market, and we had this decline that ended October 31st. That was a 10.3% correction, so almost right on the screws of a 10% correction. Again, completely normal with any given year. We've now since then had this very strong rally that we wrote about on November the 1st, saying, hey, we're extremely oversold here. We've got a lot of seasonal tendencies behind us. This is why we're going to get a rally. We've had that rally, cleared all these moving averages, lots of resistance we broke through. Markets now kind of starting to struggle here with these September highs. And again, just kind of been stalling out here over the last couple of days. It's been kind of grinding its way higher, but again, not making a big advance to any great degree, really kind of holding out here at 4,500. That's a pretty good level of resistance for the markets here short term. Markets are extremely overbought on all fronts. And so this has been a pretty broad rally. The number of stocks above the 50-day moving average have increased. The number of stocks on bullish buy signals have increased markedly. Sentiment has gotten very stretched. Technical indicators, as we talked about in this weekend's newsletter on the website at realinvestmentadvice.com, show all of our technical indicators extremely overbought here. So that all suggests that probably somewhere between this week and next week, you're going to get some type of pullback. I would suggest somewhere around 4,400-ish on the S&P 500 would be a good kind of level of support. That's about where the 100-day moving average is right now. So again, a bit of a pullback here would not be surprising. I'll give you a better entry point if we can work off some of this overbought condition heading into year end. So you got to get this pullback, lets the markets kind of reset a bit. Think about stretching a rubber band. We've talked about this before. Markets have kind of stretched that rubber band as much as it can here over the last couple of weeks. It's been a very aggressive run. Got to relax the rubber band a bit before we can stretch it again. So again, that's just kind of how the markets work over time. But I do want to focus your attention on a little bit longer term graph here, because there is kind of an interesting setup that's occurring in the markets. If we go back and look at the market from the March 2020 lows, there's a very distinct rising trend line now among all these bottoms that we put in. We put in this bottom in March 2020, the bottom in October of 2022, the most recent bottom has run right along this kind of rising trend line from that 2020 bottom in the markets. At the same time, we've also got a descending set of tops where the markets are running into right now. And again, this kind of defining wedge that we're getting is going to be very important, because as we start to look at this wedge that this market is building, if the markets can break out of that wedge to the upside, that's going to give the markets a pretty substantial move higher. If it breaks down, that's going to be a pretty substantial move lower. And that's the point about these kind of compressive these compressive channels that we get. Markets are moving into a tighter and tighter trading range. So once they break out of that in one direction or the other, you tend to get a much bigger move in the markets over a period of time. So again, what happens next over the course of the next month or so is actually going to be much more important from a longer term perspective. This market can rally and out of that trend channel to the upside by the end of this year. That's going to be an important move, talking about moving into next year in particular, as we start to look at how this market's going to act or behave. Is it going to be bullish or more bearish? This kind of technical pattern is going to tell us a lot about that. So we're going to keep watching it for you, but we're reporting it in the newsletter as well. That's what you need to know before the bell this morning.